on today's market updates. Market close. Benchmark indices ended lower for the third consecutive day on October 30, dragged by auto and FMCG names. At close, the Sensex was down 135.78 points or 0.34% at 39,614.07 and the Nifty was down 28.40 points or 0.24% at 11,642.40. About 1,322 shares have advanced and 1,222 shares have declined and 167 shares are unchanged. Bharti Airtel, MotoCorp, Eicher Motors, Maruti Suzuki and HUL were among the major losers on the Nifty, while the gainers included Adani Ports, BPCL, Coal India, Sun Pharma and Tata Steel. Sensex went down by 135 points at 39,614 points and the Nifty 50 went down by 28 points at 11,642 points and the Bank Nifty went down by 191 points at 23,900 and the Nifty Midcap 100 went up by 92 points at 17,066 and the Nifty Smallcap 100 went down by 20 points at 5,819 points. Now let's have a check on the commodities and the currencies. The British pound is trading at rupees 96.61 and the US dollar is trading at rupees 74.10 and the Brent crude is trading at $37.98 and the gold MCX 10 gram is trading at rupees 50,525 and the silver 1 lot is trading at rupees 60,341. Except auto, bank and FMCG are the sectoral indices ended higher. BSE Midcap index gained 0.6% while the BSE Smallcap index ended flat. The BSE-30 Index declined 2.8% in the current week. Market mood was varied on a steady increase in daily COVID-19 cases globally despite falling cases in India and uncertainty around the upcoming US elections. Nestle and Asian Paints were among the major gainers while the State Bank of India, ONGC and Sun Pharmaceuticals lost the most in the BSE-30 Index in the past week. FPIs bought equities worth USD 695 million over the 5 trading sessions while DIIS sold USD 740 million worth of equities in the same period. Even though the second quarter corporate earnings numbers have been encouraging so far, markets are showing signs of weakness. Our advice would be take advantage of a potential market correction to build a portfolio of good quality stocks. Here are 5 key factors that triggered a sell-off in the market. COVID-19 cases are rising which made investors nervous. Analysts are of the view that the market sentiment may remain fragile for the coming days of investors may stay away from riskier equities, assessing how the second wave of COVID cases develops. Now let's check about the week global cues. Global cues too were lackluster. As per media reports, Asian shares fell on Friday as investors took money off the table ahead of next week's US presidential election, while uncertainty over the global economic outlook grew due to rising COVID cases. Among the Asian peers, Hang Seng and the Kospi plunged over 2% each, while the Shanghai Composite Index and Nikkei fell over 1%. Economic outlook takes a jolt. Contracting for the 7th consecutive month, the output of 8 core infrastructure sectors dropped by 0.8% in September, mainly due to a decline in production of crude oil, natural gas, refinery products and cement. The decline in output during the month under review was the lowest since March. Bearing coal, electricity and steel, all sectors, crude oil, natural gas, refinery products, fertilizer and cement recorded negative growth in September 2020. Moreover, the government's fiscal deficit rose to rupees 9.14 lakh crore, about 114.8% of the annual budget estimate during the first 6 months of the current financial year, mainly on account of poor revenue realization. Selling in bank financials. Select bank and financial heavyweights contributed the most to the fall in benchmarks. Shares of ICICI Bank, Kotak Mahindra Bank, HDFC Twins and Bajaj Finance closed in the red. Technicals. Experts points out that the market is consolidating with Nifty meeting with resistance around 11,850 to 11,900 zone, whereas support is seen around 11,450 to 11,500 levels. India VIX has gained 10% so far this week, which could become a cause of concern of the US presidential elections. There is a high uncertainty in global markets due to a recent surge in COVID cases. A decline below 11,600 in Nifty would pave way for further slide. In the case of a rebound, 11,750 would act as a hurdle. Traders should limit their leveraged positions and maintain a balanced approach. India's fiscal deficit at 114.8% of annual target at September end. The government's fiscal deficit rose to rupees 9.14 lakhs, about 114.8% of the annual budget estimate. During the first 6 months of the current financial year, mainly on account of poor revenue realization. The revenue realization during the current fiscal suffered on account of the lockdown imposed by the government to check the spread of coronavirus pandemic. In absolute terms, the deficit was rupees 9,13,993 crore as per the data released by the Controller General of Accounts. The deficit at the end of the first 6 months of the previous financial year was 92.6% of the annual target. So that's all for today. I will be coming with the market updates on Monday. So all of you, please stay home, stay safe and stay healthy, and please don't forget to subscribe our channel, and please don't forget to share it with your friends and relatives. Thank you.